Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of XRP, taking a look at what's been going on most recently and what we think is likely to happen next. As we get into the video, if you find it useful and informative, smash that like button, we do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. Okay, let's jump right down into this one. XRP paired up with USDT. Here we are on the 4-hourly chart and Binance is our data source. I'm recording this a little bit ahead of time, about 6 hours or so, and so we'll see how this kind of plays out. At the moment we've just had the CPI data come out a little bit more positively than we had expected it to. I say we had expected, I think just generally the majority of people were expecting it to be a little bit lower than it actually was. It's still come down a bit, but it's not anything impressive. And this is not going to give encouragement to the Fed to kind of think about a pivot anytime soon. But then again, the Fed chair has been very clear that he has no intention of doing a pivot anyway, so there should be no surprise there. So essentially, continued rate hikes will continue in 2023. No sign of those slowing down or stopping any, and therefore, we could expect some more volatility in the market to the downside. But of course, close eyes and attention must be paid on the DXY. It is driving a lot of this move to the upside and to the downside. When that DXY starts really pushing up, then all of crypto will push down, and when the DXY pushes down, crypto pushes up, and so forth, right? So at the moment we're seeing a little bit of green in the market as the DXY is reacting or overreacting to CPI data. This is basically driven from forex traders trading USD against various other pairs such as euros, sterling, or Japanese yen, for example. So understanding that the value of the dollar has an impact on cryptocurrency is critically important and we cannot avoid. Okay, so let's talk about structure. From an Elliott wave theory point of view, we can see here we have this structure coming down. We can also see that we have this one in here, 1, 2, and 3 coming down here, and currently moving up. We have already kind of hit our 3-wave structure right inside there, and we're running out of momentum. We're already overbought on our 1-hour chart. We're almost overbought here on the 4-hour chart, so progression to the upside is slowly kind of eking out here. We are finding ourselves up in this resistance area. Again, if I were to draw this on, you can kind of see that we're just trading sideways right inside here. And this is kind of like where we're heading up towards. We're more than likely going to find resistance on it. You can also see that we have here the 50 and 200 EMAs. We can see that the 50 EMA, which is our, the most recent price action, short-term price action, the average price there, just dropping down below the longer-term price action. Essentially, that would be deemed bearish, and we can kind of see that being reflected in the price at that particular time. Then, of course, that's just your EMAs. If you throw on MAs, like just regular moving averages, or SMAs, you get different results, but just kind of bear that in mind. So here it does look like we're going to be slowly working our way up a tad more and then hit resistances, and we're likely to pull on down. Now, from a smart money concepts point of view, we can actually take a look at this and we can start to say, okay, well, you can see right up here, if I actually grab a label and I can just say that this area where we had all that consolidation, that sideways trading, is a supply area. It's marked up in red just on here. We can also see just above this area, we have a fair value gap. Let me draw that in there. That's the red mark there. Okay, and we also have our equilibrium. Okay, so these two areas are interesting points, right? So first of all, this, which is often called a fair value gap, is also what is driven from an institutional candle creating an imbalance in the order books. Okay, basically there's a gap here, a fair value gap that hasn't yet been filled. So revisiting this area, it has a high probability. We've left this one behind. If we zoom out further, you can also see there's one down here that's also been left behind and we haven't hit it yet. So there's a chance that we do actually, and more than likely, will come down to this gap at some point further in the price chart. This one comes in at about 35 through to about 35.97. So on the lower side, 35.19 and 35.97 approximately. So although we're pushing up, we'll probably expect to push up into this small imbalance between the order books up here, this fair value gap, which also happens to be the equilibrium. So the equilibrium is basically a 50% level between our premium and our discounted ranges. So down at the bottom here, we have a discounted range. This is basically where price stayed in this range very, very briefly and then rapidly moved on out here. This is basically a discounted range. People can see it's discounted and people like to buy in this range. Up here, you can see this is where the premium area is. Only dumb money would essentially be buying up here, and this is really where the sellers are. Also, you can see these red blocks or these green blocks. These are basically areas of selling, so supply, and down here, obviously, areas of demand, right, where the buyers are. So when we kind of take into consideration if I draw a Fibonacci retracement tool on here, we can see that the 50% area just here is the equilibrium, and price loves the equilibrium. So moving up into that range seems to be the obvious. But as I said, we had a three-wave structure from an Elliott wave theory point of view, right? And looking to kind of complete that down, which basically means maybe we're going to end up with a short correction, just coming down before we go up in another kind of three-wave move like so, and head up towards this equilibrium. So we end up with some kind of three-wave structure taking us back up into that fair value gap. Once that happens, expectation would be that we go back down. And if we zoom out just a fraction here, you can see our fair value gap a little bit lower in the price chart. So we would expect to kind of come down and fill that out at some point in the very near future. So in terms of XRP here on this kind of 4-hourly kind of viewpoint, we can see that there is progression to the upside to be had. But also there's progression to the downside that will have to happen at some point in the future. Now, if we bring this up into our daily chart, we can see this on a much bigger scale. Right now, what are we reacting to? We're reacting to the equilibrium. Basically, the 50% level between the high over here and the low down here. Okay, so basically the discounted and premium areas. We're right inside this equilibrium area. Okay, it's a zoned area according to smart money concepts. So basically here we can see that we're reacting. We found ourselves at a 50% retracement essentially of this move, and we're likely to kind of bounce from this area. Again, we're looking upwards here, but we do have a change of character, a characteristic change right in here on our daily chart, and we want to reflect on that. Although we've got a break of structure here, so a continuation essentially of this move upwards after we lost this existing low, we had a change of character, we had a break of structure, and we broke this high over this side, but now we're coming down. If we were to kind of start breaking some of these additional structures down here, then we really will be in a bearish situation, but we'll keep an eye on that. So on this daily chart, reacting to the equilibrium area, we would reflect on this and think to ourselves about what that might mean. Well, it would loom that we're potentially going to do something to this effect, which will bring us down, of course, into that fair value gap that was left behind. We can't see it here on the daily chart, but we know it's there. Okay, so kind of keep those things in mind. Now, if I come up into our macro view, we can see that we had a death cross over this side. It didn't really mean too much. This is just our moving averages on the daily chart. Again, nothing too much to kind of be too concerned with. We are oversold on the stochastic RSI on our daily chart. So again, that's not too bad. We can kind of take that as a bit of a positive. Now, if we remove the stochastic, throw the volumes in, the volumes are incredibly low on the daily chart. So again, we can see here that as price was coming down, we can see that volume was also decreasing. That's a positive sign. That allows you to move into oversold territory on the stochastic. So that's a positive thing. Now, if we were to reflect on the fact that we had gone up higher here, on price action, but the volumes have just been quite lackluster, then we know that really what's driving this is, of course, going to be the DXY and the value of the dollar. Now, if we take the volume off and throw the RSI in, you can see it's coming down a bit, which isn't too bad. And we check for divergences. There's nothing to note, which is nice to see. Now, on the weekly chart, bring this down. We'll just throw those divergences back on. We had the bullish divergence down here, which is fine. We've kind of seen that play out. Nothing else to note there. Volume is incredibly low, right? And so we can see this as we kind of come down in price, volume has come down. So again, a positive setup, so it's not too bad. And on the stochastic RSI, we still need to see the corrections down. And you can kind of see the Z wave coming down here a little bit. We are still looking for cheaper prices. We are talking about 26 cents, essentially just finishing off the WXYXZ structures, and we're just looking for that move down. Okay, now at the moment, we haven't broken this low over here at 28.72. This is the June low. It still hasn't been broken, but I do think we have to expect it to. And we still have this potential move up into this range that we've been kind of talking about for a while here. We tapped it once already at 42.22 to 45.75. We tapped it once. Is this rejection now kind of complete and all that kind of stuff? If we take a look at it from a daily standpoint and bring this up, we can kind of see 1, 2, and 3. It does look like we've been heavily rejected here, and it does look like we've come down quite a bit. And yeah, for the most part, we could now be talking about moving down into the slightly lower ranges on XRP. But nonetheless, I think that's going to be a fantastic opportunity for us to kind of take advantage of. So essentially, I do think that the lawsuit will be coming to conclusion soon. I don't know when. No one does. But I do think that's going to be a fantastic opportunity to kind of see some almost instantaneous gains, because I think the FOMO will be absolutely insane. Win, lose, draw, settle, doesn't really matter. I do think there's going to be crazy amounts of FOMO for XRP on conclusion of the SEC versus Ripple lawsuit. So So when it comes to the price action, I can see that we're still in a potential bearish situation for XRP, but I think the opportunity here is that we dollar cost average at these nice low areas. I mean, anything really around 35 cents just to me just seems like a steal, but 30 cent or lower is fair game, and I think that's a really good, reasonable price to be paying for XRP, considering I think the output of where it could potentially be going in the future is quite nice. So ultimately, dollar cost averaging as we kind of think to complete off our retracements here, and I think from there we'll be in a really strong position to kind of just await a verdict on whether it is going to be settlement or win or lose for Ripple, and as a result, clarity for XRP so it can get listed on exchanges in the US, which I think will increase and basically drive insane amounts of FOMO for the asset. Let me know what your thoughts are down in the comments below. Other than that, guys, I'll leave this there, and I'll catch you all in the next one.